Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts. And the first chart I'd like to look at is the euro against the dollar. Okay, if we look at this, it's a seventh bullish white soldier yesterday and still further continuation of the move up and away from the diamond bottom. Yesterday's action was a second consecutive close over the 38.2% Fibonacci line for the big March move at 111.65. Looking ahead, we now have the opportunity to try for possible potential targets on the upside for the diamond bottom. The first potential for this pattern is at target X around 116.75. I know this is a big ask, but I can only tell you what I see. A further fuller potential will be target X1 in the 117.25 area. I'd now like to add a third potential target, X2 at about 112.90. This will be a potential target for the ragged inverted head and shoulders pattern formed over April to May this year. Overall, this is a long way to go. Many things can happen which will derail and move up from this diamond bottom pattern. But that's what it looks like right now. The next one I'd like to look at is cable, aka sterling against the US dollar. A fifth bullish white soldier here yesterday, and a continued exploitation of the recent move up and close over the broken March to date downtrend. That's currently at 122.70. The latest rise was based on the former uptrend of the old March to May ascending triangle, currently at 125.11, and capped, unsurprisingly, by the medium moving average, which is currently at 125.57. Yesterday, the market punched up through this declining medium moving average and closed over it. However, on exploiting the move over the medium moving average, the market started to approach two significant and related resistances. The flat top of the old ascending triangle at 126.46, and then its partner, the long moving average currently at 126.79. This caused an aversion towards the close yesterday and a follow-on lower today, down to the uptrend of the ascending triangle right now. The next chart I'd like to look at is euro against sterling. A bullish white soldier yesterday, as despite earlier penetrating the big 50% Fibonacci line for 2020 at 88.89, there were no closes below it. So the market has started to move back up, today included. This tempers the threat to the idea I've been putting forward of a rounded bottom with a failed spike around the week of the 20th of April. The next chart to look at is the US dollar against the Indian Rupee. Here, a bullish counter yesterday to the previous session's big bearish engulfing pattern. It was hardly surprising, as I had mentioned over the last few days, that much like the action 3 weeks ago, we'd seen a reversion back up again. It was not as high as the high of the bearish engulfing pattern, so it still fitted in with a slightly longer term picture or action of last week, a weekly key reversal down. However, today we have tried higher, enough that we've tied with the high of the bearish engulfing pattern, though not as yet exceeded it. It nevertheless all still ties in with the idea I mentioned 4 weeks ago of the moves from March date being an inverted ascending scallop pattern. The final chart I'd like to look at is the US dollar against the Brazilian Rial. A second consecutive big action yesterday, a second big bearish black Mariposa that ties in with the prior combined bearish engulfing pattern, plus the bearish open and close long black Mariposa. Perhaps most important of all, the market has now had a consecutive close below the key February to date uptrend, currently at 527.57 of the December 2019 to date large bump and run pattern. We are most definitely now in the run stage. Potential on the downside for such a pattern would initially be target X in the 471 even area, whilst a fuller optimal target X1 would be in the 442 area. There's a lot of things that can get in the way before the market tries either target, but it's still worth pointing out. So that about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.